And what's great about crypto is it's available to everybody. It's fractionalized, so anybody of whatever wealth can put in 10% of their paycheck. And over time, because it's basically a technological adoption model, if that technology gets adopted, it tends to be exponential in price gains over time. So it gives them an opportunity to take a stake in the future.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin and crypto. Raoul Pal says, it's fantastic that younger people are participating because it gives them the chance to succeed more than their parents did. However, remember that when the baby boomers started investing when they were roughly 35 years old, the S&P was trading at a ratio of 7. Interest rates were at 133% or 15%, and property prices were incredibly low compared to wages. These kids don't have that. They have the exact opposite, so there isn't a chance. I refer to this as the Bitcoin life raft, or the crypt life RAL. But do you think that many of them are growing a little jaded after witnessing how companies like SBF and incumbents and traditional financial institutions are attempting to appropriate the innovations that have occurred in the crypto space and turn them into their own? I believe that if you were to market a venture capital portfolio in real time, you would conclude that all of the companies in your portfolio will make you a billionaire or die every week, and that's what cryptocurrency is all about. It's just the beginning, and lots of things Raoul Pal discuss, so please watch the video to end and share, subscribe our channel, Everyday Finance. Thanks.
Long-standing belief that this is an answer. You see, the traditional assets are all very expensive. People don't have enough money to invest. So what we found is people are searching for another way of being able to make money that has a higher upside, higher expected return. It's a logical thing to do when you have not enough income to pile into investments like the baby boomers had. And also the issue is the baby boomers are in the same workforce as their kids. So that puts pressure on wages. It means that it makes it very hard for people to get ahead. And then we've got technology as another kind of super wave that's also deflationary on wages. So people feel the pinch all the time. Meanwhile, the price of real assets like real estate keep going up, and you can afford much less of them every year. And that's driven a lot by the debasement of currency by the central banks. As they print more money, it optically rises the price of assets. And so therefore your earnings buy you less assets over time. And what's great about crypto is it's available to everybody. It's fractionalized, so anybody of whatever wealth can put in 10% of their paycheck. And over time, because it's basically a technological adoption model, if that technology gets adopted, it tends to be exponential in price gains over time. So it gives them an opportunity to take a stake in the future. You can be kind of like a VC and get those VC style gains, and you can fractionalize it down to smaller amounts that suits you. So it's very egalitarian in allowing people to participate in the future economic system. If you think, for example, right now, there's an AI boom going on. What can the average person do with that? Well, yes, you can retool your job. You can retool your productivity, but you can't invest in it because the VCs get to invest in it. You don't. You only get to invest in it when it becomes a public company and the VCs have made all the money. Crypto is very different. So I think it's great for the participation for younger people to give them an opportunity to get ahead, more like their parents had. Don't forget, the baby boomers, when they were the same age of about 35 years old, the S&P was trading at a P/E ratio of 7. Interest rates were at 13% or 15%, and property prices were super cheap versus wages. But these kids don't have that. They have the complete opposite. So this isn't a chance. I call it the Bitcoin life raft, or the crypto life raft.
Raoul Pal also discuss about Bitcoin and Ethereum upward trend. Raoul says, if one were to analyze the logarithmic trend of Bitcoin or Ethereum, it becomes evident that there is a consistent upward trajectory. However, the recent extreme fluctuations in value have generated a heightened sense of volatility. This volatility has posed challenges for individuals attempting to construct viable business models, as it necessitates a comprehensive understanding of what strategies are effective and which ones are not. It is important to take a step back and examine the instances of fraud and the subsequent market instability. While fraud is an unfortunate occurrence that can be observed across various industries, it is particularly detrimental in this context. The reason being that individuals were endeavoring to establish business models that relied on leveraging the volatility of an asset with an 80% fluctuation rate. This approach is viable when dealing with assets such as real estate, where the value remains relatively stable over time, allowing for borrowing against it. However, when dealing with assets like Bitcoin or Ethereum, which experience significant price fluctuations, the consequences can be catastrophic for all involved parties. Consequently, this serves as a valuable lesson for individuals, prompting them to reconsider the feasibility of such practices. Perhaps the implementation of decentralized finance, DeFi, through smart contracts offers a more prudent approach, as it provides a better comprehension.
I think if you were to have real-time mark-to-market a VC portfolio, you would see, we're going to be billionaires, we're going to die. We're going to be billionaires, we're going to die on a weekly basis from all of your portfolio companies. That's what crypto is, right? It's early stage. Things don't have full traction yet, not full product market fit. So volatility is both a bug and a feature, but it really is the feature of the space, because risk-adjusted returns, higher volatility, where the returns are skewed to the upside, tend to accumulate. So it's very hard for people to deal with the emotional ride of crypto markets. I've been in the market since 2012, 13, and I've ridden the ups and downs, the 85% downs. I've seen the multiple 10x, 20x, 30x's to the upside. It's a matter of time horizon. You have to just step back and say, what we're trying to get to is from here to here over a period of time. And that journey is not going to be a smooth line. It is going to do this. But when you zoom out, you can see, if you just do a logarithmic trend of Bitcoin or Ethereum, it's just an upward trend. But these wild swings feel very wild. Now, when you're also building business models, you're learning what works and what doesn't work. So if you step back about the fraud and the CeFi market blowing up, what was that all about? Fraud is fraud, right? Fraud happens in all industries, and that's bad, and those people get weeded out. But also, it's because people were trying to build business models based on leverage in a volatility of an asset with a volatility of 80%. So what happens is, it's fine with a house price because your house doesn't move a lot in price, so you can borrow money against it. But when you've got something like this that goes up and down a lot, everybody gets blown up. So it's a lesson that people are learning is, oh, we can't do this anymore. Maybe DeFi with smart contracts is a better way of doing it. So we've got a better understanding of where the risks lie. So it really is a business model thing. I know it's hard for people. I get it. I've been through it myself. But it's a matter of staying alive. What we want and what we will get are two different things. We want a decentralized financial system. What we will get is a hybrid. Because we're already seeing the traditional financial companies, as regulation comes in, they're allowed to participate. So they start creating vehicles and ability. Now, it's actually not that bad because they understand how to deal with leverage, and they have huge experience in huge systems and risk management. So if we want broad participation, let them play a part. But many of us want to operate outside of that system because banks, even today, you're in the UK, Metro Bank is going tits up as we speak, so it seems. And that system, because of the amount of leverage, it's fragile. And what we know about DeFi is if we get it right, it's less fragile. Now, DeFi still has fragilities too, right? We've had hacks, we've had other issues. So again, early stage, but I think we'll end up with a hybrid system, much like we'll end up with CBDCs and stablecoins, and they will coexist. And we get the choice. That's the most important thing. We're not forced into one system or another. We get the choice of how we want to operate and where we want to operate. I think it really is. They're trying. I mean, I think the EU, the UK, Singapore, a bunch of people are really trying to get this right. Now, a lot of people can't participate in DeFi because of KYC AML. And we have to accept that. So many people are now working on institutionalized versions to allow institutions to do that, but still can have decentralized pools of capital, but with KYC AML. Now, maybe we use zero knowledge proofs to do that at a broader level. So this is one of the issues that we've got. We've got this very restrictive KYC AML global framework that we have to operate within. DeFi falls outside it. Once we solve those kind of things, I think it becomes much easier for everybody to operate in that world.